Hello and welcome to Business Live. Coming up in this bulletin, some oil marketing companies finally adjust for prices at the pumps after keeping values unchanged since the middle of this month. Also, IMF staff expected in Ghana next Monday for Faith Program review. Bank of Ghana's intervention and fiscal discipline are expected to dominate engagement. Also coming up, Ecuador set to become world's #2 producer of cocoa as the country pumps more investments to support its cocoa farmers. We will tell you the implications for Ghana, which is currently the second leading producer of cocoa in the world. My name is Winston Taki. We have more of this right after this break. Stay tuned. And now to a first business story. Some oil marketing companies have finally started increasing prices of petroleum products at the pumps from this morning. George Biafe has the rest of the story.
Joe oil marketing firm GOIL took the lead this morning, selling a litre of petrol at 13 Ghana cedis 38 pesos from its old price of 12 Ghana cedis 99 pesos. Diesel, on the other hand, is going for 14 Ghana cedis 40 pesos per litre from its old price of 13 Ghana cedis 90 pesos. The action by the second biggest player in the oil marketing industry is coming after most of the oil marketing firms kept their prices unchanged since the middle of this month. This is despite the fact that fuel prices should have gone up by more than 6% per litre from September 16, 2025. The decision to keep prices unchanged for the second pricing window for this month was influenced by competition, the price deregulation policy, and improved supply of petroleum products. One is not sure for now how this move by GOIL could force the over 200 oil marketing companies to also increase prices at the pumps later this week. The Chamber of Oil Marketing Companies had attributed the expected increase in prices of petroleum products with the second pricing window due to the cedi's depreciation against the dollar since last month. However, with the Ghana cedi making some marginal gains on the market, one is not sure about how this would impact prices of petroleum products from the beginning of next month.
Joining us on Zoom is the Executive Secretary of the Chamber of Petroleum Consumers, Duncan Amoah. It's good to have you on Business Live, Dr. Duncan. Now, finally, a major player in the industry has taken the lead by increasing prices. Is this to be expected, or are you surprised by this direction?
Good evening to you and, of course, to your viewers. We are quite happy. I remember speaking to you last week and calling on the oil marketing companies to, as they were, try to see if they could absorb the increments that were anticipated. They've given us a week at the old pricing levels, which is, for me, something very welcoming because the cedi's movement, according to the past fortnight computation, was only suggesting an upward adjustment. But clearly, most of the oil marketing companies, like you mentioned, have kept their prices at the old levels. They have not gone up. I was not surprised to see GOIL this morning adjust by some 3% on the current market price. I've also seen a few other oil marketing companies come up with new prices. Surprisingly, the adjustments that we are even witnessing now do not go any higher than we had anticipated. Originally, we were looking at petrol doing about 4%, diesel, some 7%, LPG 7%. What we have recorded so far is doing about 3% average. That for us is a lot welcoming, and I think that the oil marketing companies on this occasion have been magnanimous to Ghanaians.
Indeed. From your industry engagements, are other oil marketing companies also going to increase prices subsequently?
Let me be quick to say this. If anybody is watching us now and has not bought fuel from their favorite OMCs, please do, because per the industry figures, they should all have gone up. You had a situation where within the past window, that is the period within review, the cedi had lost ground, not just by a few points, but it lost ground significantly, almost 8%. And so it will be difficult for the oil marketing companies to still sell at the old price levels, knowing very well they would need to recover a lot more cedis to be able to, as it were, pay their debts in the dollar index. So I will not be surprised that before close of day today, the other oil marketing companies follow suit. So if anybody hasn't bought yet, we will be encouraging. Try and get some fuel now before you get home, because it might not last for the next 1 week.
I'm sure people will be rushing to their latest OMC shortly. But can government or the National Petroleum Authority do anything to cushion consumers in any way?
I have said this severally, and I would want to reiterate. The situation where we just wait and do price taking and obey the wind, as some people would want to call it, whatever happens on the international market, we pass it on to our people. Whatever adjustments that happens with the local currency, we pass the effect on to the people. Whatever taxes that government intend to slap, we pass it on to them. That era has got to come to an end at some point. You would need to plan for your people so that if you stock enough in country, you have enough storage space with BOST and the other private depots. If you store enough, what then happens is that even when prices are looking upwards, you can always fall on your strategic stock to say that, look, I have enough. I got them a bit cheaper. I got them at the time the exchange volatility wasn't that bad. And so I can use this to cushion the market. We do not have a single liter of cushioning as of this point. And I think that that should be a source of worry for government going forward, because you never know when the cedi will take a beating again. You never know when the tensions between Russia, Ukraine, tensions in the Middle East, Israeli activities within Gaza and the neighboring countries, Qatar and the rest coming on stream. You don't know exactly what happens tomorrow as far as the international market space is concerned. But the only thing you know is that you have enough storage space. You have some money that you could also use to get fuel as a strategic stock. We should be thinking about planning for our people so that we are not taking over by development globally, and our people will have to pay the price. Mind you, the last thing, the public transport operators are already up in arms asking for transport fare adjustments, which I think we'll be having that conversation in the course of the week. So government should be concerned that you get some of these increases coming every now and then. The solution will be to plan for your people.
Indeed, the solution is to plan for your people. Thank you, Duncan Amoah, for speaking to us here on Business Live. Now, away from that, IMF staff are expected in Ghana next Monday for the country's 5th program review. George Biafe has the rest of the story.
The IMF team are expected to be in town for 2 weeks for this 5th program review. This will be the last but one review before Ghana ends the program in May next year. We understand that one issue that could come up strongly is what Bank of Ghana is doing to try and formalize its dollar intervention for the market. Another issue that will come up strongly during this 2-week review by the IMF mission is that what measures are being instituted to ensure that Ghana sticks to fiscal discipline post-program completion next year. The review will primarily focus on the economic data ending June 2025. We understand that other issues that would come up strongly is inflation performance, the impact of the recent appreciation of the Ghana cedi on revenue mobilization and social spending. If Ghana passes this review, some $360 million should be disbursed to hit Bank of Ghana's account by October this year. Since Ghana signed up to the program, it has so far received some $2.3 billion out of the total $3 billion promised under the FAN program.
Now, Ecuador is on course to produce more than 650,000 metric tons of cocoa in the 2025-2027 season and could surpass Ghana as the world's second largest fruit grower of the chocolate ingredient. That's according to the data from that particular report. Yes, more also in this report.
According to Reuters, soaring world cocoa prices have encouraged farmers in Ecuador to invest more in their plots, leading to increased yields. Cocoa prices more than doubled last year, reaching record highs above $12,000 a ton, following failed harvests and disease in Ivory Coast and Ghana, which supply about half of the world's cocoa. An increase in production in South America, where Ecuador is the leading grower, has helped to fill the supply gap, and prices have fallen by about a third this year. They remain, however, at historically elevated levels. Farmers in Ecuador get around 90% of the world price. In Ivory Coast and Ghana, by contrast, farmers receive about 60 to 70% of the world price at best.
Joining us on the phone is economist Professor Patrick Esuming. Prof, it's good to have you here on Business Live. What is the significance of the fifth review under the Ghana's IMF program, and what should be expected from this particular mission?
Good evening and good evening to you. Thanks for having me. Well, this being the last but one, I think this is quite significant. We are already less than a year before the end of the program. So after this review, what is left, I'm not sure that there will be too much time for substantial changes. In any case, the last set of actions that we have to take them by end of the year. So I think this is quite significant. There are a few structural things that we are supposed to do that are falling due for this review. I think this review, the cutoff is June 2025. So there are items like the Bank of Ghana Amendment Act, and there are a few things to do with some of the reforms to improve public sector financial management, including making sure that we streamline all expenditure control and related matters. So, and of course, like you mentioned, or not mentioned in the report, I'm sure the discussion about the Bank of Ghana's intervention in the market will also come up. But I mean, those are, that should be like a side issue. But the main thing are the structural things that you are supposed to by the end of.
Great. Prof, what key economic indicators would the IMF likely focus on during this review, and how is Ghana currently performing in those areas?
Well, I think the quantitative performance measures are there, what we generally call the macroeconomic indicators. So we have the inflation target, we have the net zero length from the Bank of Ghana, the government, and then we have the net national rate. And so I think in general, those are unlikely to develop. The country are very well. If you look at net national rate, way ahead. The inflation that we couldn't meet at the end, seeing that it comes And if you look at Bank of Ghana spending, government, so there was acquisition of new payout.
Prof, can you please position yourself appropriately so that we can hear you quite clearly? Yes, thank you so much.
Is it better now?
Yeah, it's quite clear now.
So I was saying that, I mean, in terms of the primary indicators, the primary anchor, the primary budget deficit, based on the information that the Bank of Ghana presented at the last meeting, we are on track for all of those things. So I don't think the quantitative performance indicators will be an issue. The issue that we struggle with persistently is delay in implementing the structural reform. So by the time of the end, or by the end of the meeting, we know whether this time we manage to meet them as required.
All right, Prof. Now, Ecuador is projected to overtake Ghana as the world's second largest cocoa producer. What will the impact, what would this be? Basically, how would it impact Ghana's cocoa sector in a short and long run?
Well, I think that regardless of whether Ecuador overtakes us or not, the problem we've had is that we've not been able to take advantage of the fact that the prices are at record high. And I think that's very important. At a time where the price cocoa has go high, you see that tax have not, and really a reflect of just line our money. I think for most families, the North people, last is just over 1,000. So
Prof, once again, we are missing out on some key insights you're sharing with us. Can you please position yourself once again and so that we can have it clearly? Thank you so much, Prof.
Is it better now?
Yeah, it's quite clear now.
Okay. So I think the main point I'm making is that, Ecuador overtaking us it doesn't break. Don't forget that for a long time, Ghana was even number one before the Ivorians overtook us. So to move to the third position is bad enough. But even without somebody else overtaking us, I think the fact that cocoa prices have been very high, our production levels have low that therefore we are not taking a record high price. That is also that have to implement the necessary reform along.
Great. Now, we are actually briefly, will it have an impact on our foreign exchange balance, especially inflows, and also subsequent impact on Ghana City in any way?
Well, in some sense, the fact that our production, especially for Ghana and Cote d'Ivoire, hasn't done very well is part of the reason why the world prices have been high. But you have to understand that it's not only Ecuador that has been racking up their production. There are other countries in South America that could well overtake us if we don't up our game. And of course, when we are not producing enough, at the moment, our earnings from cocoa is high, but that's because the prices are high. Our volume of production is not very good. And when that happens, then it obviously affects our earnings and consequently our currency.
Thank you for your time here, Professor Patrick Isumini is an economist and giving us insights on development in Ghana's cocoa sector and Ecuador. Their projection tells them that they are likely to hit about 650,000 metric tons of cocoa production. Whether this will have an impact is what we've been assessing here. Now, moving on, the Communications Minister, Sam George, has granted a one-week extension to the stakeholder committee tasked with evaluating the DSTV pricing in Ghana. The committee, which began work on September 8, 2025, is now expected to submit its final report by September 29, 2025. The National Communications Authority, NCA, in a statement issued on Tuesday, September 23rd, said the extension was granted to enable the committee to complete its work and ensure that its recommendations adequately address the concerns raised by the Minister over DSTV pricing. The committee's mandate includes developing a shared understanding of DSTV pricing for Ghana and formulating commercially viable measures acceptable to all parties. It is also working to establish a roadmap to tackle cross-border piracy of DSTV decoders and services from Nigeria into Ghana. Welcome back to Business Live. My name is Winston Take, and now to more news. Members for the Economic Community of West African States, ECOWAS, have begun a validation process to adopt the draft manual of operation for the community levy. The community levy is a 0.5% tax imposed on goods from non-ECOWAS member states. It constitutes between 70 and 90% of ECOWAS budget. The Director of Budget and Treasury at ECOWAS Commission, Moloku Azikiwe, explains to Joy Business that this process is an important stage in adoption of the manual. Community of West African States, ECOWAS, charges community levy of about 0.5% of imported duty on goods from third-party countries to every member country as ECOWAS levy. This fund is used to support the operations of the Commission and has been a source of income for majority of its activities. Although the Commission uses an existing guidelines for the collection, it has become necessary for the manual, which gives more clarity on the payment process. Director of Budget and Treasury at the ECOWAS Commission, Moloku Ezekiwe, believes that it will help mobilize more revenue for the ECOWAS.
We had a protocol, and the protocol had various articles, and the articles just quoted the provisions. However, what the manual does is to drill down and give specifics. For instance, with regards to deposit of levy proceeds into accounts, how do you do it, when do you do it, the frequency of doing it, and all whatnot. So the manual provides a very much detail on how to implement the provisions of the protocol.
Representative of the Chair of Administration and Finance Committee at the ECOWAS Commission, Dr. Robert Moikowa, expressed appreciation to the member state for supporting the work on the adoption process so far.
Without doubt, the levy remains the largest source of funding for all ECOWAS programs and activities. This justifies the reason of our efforts to ensure its sustainability. I wish to therefore appreciate the management of ECOWAS for championing and delivering on the Council approval for the development of an operational manual that is aimed at providing guidance and clarity on the smooth implementation of the ECOWAS Community Levy Supplementary Act.
Ghana is hosting the 4-day meeting to consider the manual, which will be adopted by all member states later in the year. That's all for business here on Business Live. My name is Winston Taki. For more business updates, visit myjoyonline.com/business and you get all the insightful stories there. Thanks for watching. Enjoy the rest of our programs.